is Ruth Pollyblank. I am the Global Vice President of Insurance for Mastercard, having joined Mastercard about 2 years ago now, so primarily through the lockdown, but after spending a good 20 plus years in insurance, which is how I know so many of you tonight. It's great to see people in the flesh again. My caveat this evening, I'm only going to talk to you for about 10 minutes, and I don't have a demonstration or a presentation. I don't have any actors, although Greg from QuestGates did offer to get in the car and pretend to crash if it was going badly for me, so I'll keep you on standby, Greg. So thanks very much for having me. I'm really, really pleased to be here. I think we've lost a slide somewhere. The first question always, when as Mastercard I talk to insurance organisations, is why on earth are Mastercard talking to insurers at all? And I want to reassure you, Mastercard are really, really good at digital technology and payments. We have no interest in becoming an insurance company. But what we really are good at is working in partnership, and it goes to the point that Adrian made earlier. We have an entire part of our business called enterprise partnerships, which I'm very proud to be part of. And our remit is to take the substantial skills, knowledge, and expertise that Mastercard has and enter new verticals. And my colleagues have been really successful at doing this in travel, in smart cities, in logistics, and lots of other areas that will touch your lives every day. And it's my responsibility to take all of that great stuff and to work in partnership with insurers. And I use the term insurers to mean any insurance organisation, and to create and disrupt new markets and verticals. And I do that in 3 ways. Firstly, I try and take all those great assets, so whether that's payments, obviously, but also we have huge data business, identity verification, cyber, in fact, over 500 separate products which we can take in partnership. So I try and put that into the insurance vertical in the insurance world. The second thing I do is try and take insurance into all the other verticals that Mastercard works in. So as I said, we talked about smart cities, talked about data. There's a whole host of applications for what we do in other verticals, and I think insurance can solve for those in a really mutually beneficial way. And the third thing I have the pleasure of doing is sitting with the C-suite of insurance organisations and asking them what they want to achieve. What's their strategy? Where are you going? What's stopping you getting there? And what role can Mastercard perform in helping with that, solving for those challenges in partnership? The 3 things I hear frequently: we want to digitalise, we want to reduce costs, and we want to reach new audiences and partners. And those themes are no more relevant than anywhere else than in the claims space, which is why Stuart kindly invited me to speak to you this evening. So, if we're talking about challenging the status quo, let's establish what the status quo is. And I'm going to be focusing on payments this evening. The status quo is this: as insurance organisations, we tell customers when we're going to pay them and how we're going to pay them. And let's face it, in no other industry would you get away with that. So even if our processes are very, very slow, even if we're insisting on paying money into an account which is overdrawn, so your customer can't even relinquish those funds, even if they haven't got access to the account that we're paying in, we have our modus operandi for pushing payments out, and we do it regardless. We say that claims are the acid test, but my experience is that acid test finishes at the point we decide to pay, and then we fall back to the old processes and the old ways. Insurance has a very tactical view of payments, and that's fine because historically that's worked for us. But actually, it's a really strategically important area. You can make money from your payments process, you can improve outcomes for your customers. And so we want to elevate that to make it a more strategic conversation. I'm obsessed at the moment with building work. I'm having it done, and I keep hearing this first fix term. ACH payments were great 10 years ago. Thank God we moved away from checks. But they are not the be-all and end-all. There are other ways to move money to your clients and customers very, very quickly. And the other reason we have the status quo, and I apologise if any IT people have accidentally wandered in this evening, but the tech stack is always full. The tech stack will always be full, but do you know what? We came through a pandemic. Adrian was talking about going out and buying Chromebooks. It doesn't have to be onerous to make changes that are really good for your customers. You can do it with single integrations and with API technology. It is out there, I assure you. I included this stat, right? So it's 82% of CEOs say that technology will disrupt their sector in the next 5 years. What do the other 18% think is going on? I mean, technology is going to disrupt the sector absolutely tomorrow and the next day, 100%. There's no question of it. So I'm going to focus on virtual cards, and here's my other caveat. There are tens of solutions for moving money better. I'm focusing on virtual cards because they're highly configurable as a solution. So whether you insure pets, houses, multinational conglomerates, or everything in between, there is a way of structuring virtual card payments that can work for your customer base. And here's just a few of the key points around virtual cards and what they do. Firstly, they exceed customer expectations, which is what everyone here is all about. Moving money quickly, getting it to your customers in the way that they want. It's extremely quick. There's no Mastercard lawyers in the room, so I'm going to tell you it's instantaneous. Officially, I have to say it takes up to 30 minutes, but atypically it's under 2 minutes to move money from your designated account to your customer. It's incredibly cheap to do. It's a case-by-case basis. Depending on your particular circumstances, I can't guarantee that virtual cards will be cheaper. However, operationally, they will be more effective. And I know there's no point telling a room full of claims professionals that you can make money on virtual cards, but you can, and that's another conversation. So it's either an income stream or it's something that you can push back as a benefit to your customers. They're incredibly secure, they're encrypted, they can support the reduction of fraud because you can designate how they're used. And at this point, I just want to clarify, a virtual card, a VCN, is simply a string of 16 digits. You can email them, you can SMS them, you can send them in any way, shape that you form. And when the recipient receives them, in a number of ways, they can consume the money that is attached to that card. So we can reduce fraud by limiting the merchant codes to which virtual cards can be realised. For example, you can limit a virtual card so that it can only be realised by a merchant who comes under the home improvement category. So if you are sending money for a particular purpose, you have the option to configure that card so it can be realised just in particular stores. But again, I go back to my point earlier, this is all configuration. Right? There might be lots of circumstances where you don't want to dictate how your customer uses their money, you simply want to deliver it, and that's fine too. They're great for vendor management because they're instantaneous, and each virtual card can carry up to 22 lines of data. So your customer's name, policy number, exactly what the card's to be used for, can be carried along with that payment. And so it cuts out a lot of costly reconciliation, but also is immediate. And so we come back to these better customer outcomes. So, a very crude demo compared to the very sophisticated ones you've seen. This is my IT skills. We effectively here have a client being notified that their payment has been approved. They have the opportunity there, and again it's configurable, to verify their identity. So you can tell us how you want to verify that. We even have the capability to build in a selfie if you've onboarded that customer in that way. This is an opportunity to share documentation, information, guidance, safety information, whatever it is that you'd like to communicate. You can ask your customer to sign, to say that they've accepted, that they understood. If you've got any regulatory requirements you want to build in your process, that's an opportunity to do it. And then we come to the choice. So you'll see here, apologies if you can't see that, and apologies it's in dollars, but we are an American company. You have the option to direct your money. So do you want to send it instantly? Do you want to send it to a card, a debit or a credit card? Do you want it to go to your bank? That's your choice. If you choose a virtual card payment, you simply fill in your contact information, double check, and boom. You've got a 16-digit code, which you can add to your iPhone wallet, to an Apple wallet, to other wallets. You can give the code virtually to a merchant, to a hotelier or so on, or you can go onto hotels.com and book your hotel accommodation using that as a virtual credit card. So, in terms of use cases, I've just mentioned there, consumers have the opportunity to use these sorts of things for hotels, either directly to the booking desk or via hotels.com. They have the opportunity to use them for onward travel, for example. So if you had a delivery driver who was involved in a collision, you can, with virtual payment, pay Uber to deliver those goods onwards, should you wish, and any other version of that. For things like veterinary services and medical services, we've also used virtual cards as a way of replacing a letter of guarantee. So we can pre-authorise the card, but have the card date postponed so it doesn't start until work has been completed or approved or whatever it is. I remember I worked for an insurer at the time of Buntsfield, and Buntsfield, if you remember, was a huge explosion that happened in the early hours of Sunday morning. And around 12 businesses were really severely impacted, and there were about 2 spare warehouses in a 50-mile vicinity. So insurers spent all of Sunday afternoon trying to raise checks and cash to be able to put the money down on those 2 warehouses in order to secure it for their own clients. Virtual cards obviously would remove the need to do any of that. And also looking at, and we are at a tech conference, we look towards the other types of technologies and types of insurance that we're moving towards. Mastercard are heavily invested in a parametrics practice. Parametric insurance being insurance that is triggered not by a first notification of loss, but in fact by a pre-agreed binary data point. We're working with AI partners, and we saw Tractable earlier. We're looking at blockchain. We're looking at all sorts of different technologies that will change how we structure insurance, because insurance and risk has inherently changed, and therefore we need to change along with it. All of those things, those new technologies, the ability, for example, to use scanning satellite technology, to scan crop health around the world and understand the propensity and return of that crop before and after an event. So the payment could hit the farmer's account before he even knows there's anything wrong with his crop. All of this relies on the instantaneous receipt of money so that you are intervening in that process. And we saw this through the pandemic. My local pub, for example, closed down and within a few days had purchased a vehicle for delivery, printed menus, dropped them around the village, invested in takeaway cartons and so on. And through that, they were able to sustain themselves through that period. They could do that because they had the cash to do it. For organisations that don't have the cash, how can they innovate and survive when circumstances change? So, if claims are the acid test of insurance, I would suggest that for claims, the acid test is the point of payment. And we're going to have to re-examine what the future of claims and claims payments look like, because the future ain't what it used to be. Thank you very much for having me.